Good morning, trading world. Today is March 22nd, 2024, and this is my pre-market outlook and technical analysis for day trading the markets. The title for today's outlook: still way outside the weekly expected move, so another ride on the rocket is quite possible. Yep, we are still in a pretty dangerous spot right now. That spot is outside the weekly market maker's expected move. Yesterday, we didn't make it back to the upper edge of that weekly expected move, and that's down all the way down here at 52.63, the purple line. And I explained yesterday how dynamic hedging by money managers could spark the market direction like gunpowder. Just a brief recap: money managers holding on to a portfolio or bag of various stocks, they can't hedge each stock individually. So what they use, they pick an item like the S&P 500 futures to use as a hedge, and the higher we are outside of that market maker's expected move, the more futures they have to buy to hedge their portfolio. If we were on the lower side, the more futures they would have to sell to hedge that portfolio. And so that puts us in this quandary or perpetual type motion. The longer and further we drift outside of it, the more they have to buy futures. And so you're going to get this kind of stop and start motion where we start moving pretty good and then we slow down, even out, and then bam, we start moving pretty good again. And that's that dynamic hedging taking place where we start where all the buying of futures to head continue to go, and then we reach a point where we think it's going to cool off, and it comes back a little bit and then starts to take off again, and bam, we got to buy more futures. That's, in a sense, what's going on. Today is a primary expiration day, so we got extra motivation to hit extremes today. We are in a falling phase on both the 4-hour and the daily cycle, so I expect some extreme two-sided trade. Combine this with a flirting sell signal on the daily time frame, and this could be pretty volatile. Let's go ahead and jump right into the zones today, and it's going to look crazy today because there's a lot more numbers on the chart than normal, but because we're so far outside the range, we have to be prepared for so much more. And there are still even more numbers that I should put on the chart here. But let's go, because right now we're kind of in the middle of things, like where I would normally or want to describe as my Jack, Queen, King zone is not going to be the Jack, Queen, King on the support side, because we're splitting that zone up. We're in that area where we could go down a lot more, or we could go up, but this is essentially supposed to be a support zone. So right now we're going to have an expanded support zone, because I expect some activity to really drag us lower. I got short yesterday in expectance of being dragged lower overnight, and I even put in a little message up under the video that I don't expect these levels to hold overnight, and it was going to drag. If we started to fade, it's going to carry over overnight into the pre-market. So I did put that message under the in a comment under the video and on the Reddit page. So excuse me. Let's start with this expanded support zone. Right now, what I have as the support zone or Jack support zone starts with this 5308. The Queen support zone is going to be 5304, and then I have the King support zone at 5289, and I guess I could have put the other, let me change that. I could have put the other zone below that. We have like a 5284. We have a 5284 right about here. All right, so Jack support zone 5308, Queen support zone 5304, and then the King is separated by the battleground. But we have the King zone from 5289 all the way down to 5284. And let me make sure all of that is right here, 5304. Excuse me. All right, so that's our weird support area today. On the resistance side, we have our Jack resistance zone at 5328, Queen resistance zone at 5331, and King resistance zone at 5337, and it could go all the way up to 5341, and I'll write that above it, 5341. So we have a lot of distance that could get covered today. So I'm expecting a huge spill out early morning, and then a reversal at some point middle of the day that could bring us back all the way up and still may get us into new highs at some point. It just all depends on how deep we go down into here, because it's still quite possible that we come all the way back down and touch the upper edge of this expected move. I don't put it past the market this morning, so I knew that being short was going to pay major dividends overnight tonight. So let's go back and speak about the battlegrounds. The important battleground this morning, or no man's area to hold on to, is going to be this 504 area all the way down to this 5293, and I got some numbers wrong here. Give me just a moment. All right. That expanded King's support zone is actually 52.93 down to 52.89. And what I was talking about is the battleground. The important battleground to hold this morning is going to be between this 53.04 and 52.93. And the more time we spend below this 52.99, the more likely we are to put the more time we spend below this 52.99, the more it speaks to a bearish reversal. The more time we spend above this 52.99, the more likely we are to push to new highs. On the other end, the resistance battleground is between 53.17 and 53.28. If this battleground, the line of demarcation is going to be this 53.22. The more time we spend above 53.22, the more likely we are to break out and push to new highs. The more time we spend below this 53.22, the more likely it is to push lower. Today's reaction areas. Let me write these up. Today's reaction areas are as follows. The first one is going to be 53.13. The next area is 53.22. And then on the buy side, we have 53.05. $52.98, and $52.80. Now, I'm not putting it past, like I say, we got to be prepared for everything, but the reason I have all of this up on the board is because we could very well take a dive and try to get back to this 52.63. And this is the upper edge of the weekly market makers expected move. Now, again, pre-market, we could very well hit it, consolidate, and take another dive. And consolidate and continue to dive, and then all of a sudden, boom, we take back off again. This is how today could be structured. So we have to be prepared. I expect battle between this 53.12 area and 52.99 a good portion of the morning. If we break through 53.12, we could really get going today and slow down at 53.22 and then get going again with a break of that point. We have a retail sales report at 8:30 a.m. that is capable of resetting the morning's momentum. That's if the momentum is going down, it could turn it up. If it's hovering up, it could turn it down. So we have to be aware and be careful of that. The scenarios of the day are as follows, even though I just gave you a good bit of it here of how I think that things could play out. But the first scenario or day type that I'm going to be looking for is going to be a rounded reversal day type. And all the rounded reversal day type is we're probably going to start off with a gap down, but usually when it's a rounded reversal day type, we gap and go. We're going to gap and just keep going. And usually at some point, usually that midday chop we come to, we go sideways through that midday chop. Let me make it look a little better than that, but we could head down and get to that midday chop somewhere down here. And usually on a rounded reversal day type, just as hard as we came down during the morning session, we're probably going to go up just as hard. One of the issues that I see today, or one thing that may surprise people today, we may have like an odd formation, and that odd formation could probably look like this today on the rounded reversal. Instead of us getting a midday chop, we could get a midday drop. So that's one of the things that we have to be prepared for. And it could happen either way. Even if we start up first today, we could have a midday drop if we start to form a wall up here and you see that we are not getting past that 53.22 and we just keep bumping and rejecting that 53.22 or whatever the level is to the top side, that speaks to me and tells me to be prepared for a midday drop. So that's the rounded reversal day type that I see that could happen. The other thing that I see that could happen, we could have a trend day down. And let me see what we could definitely have a trend day down based on where I'm seeing the projections for the advanced decline. So a trend day down is we're going to have gap down, and at some point at the open we're going to give a half-hearted try to close that gap, but we're going to find resistance on or before closing that gap, and then we're going to enter into the downtrend for the day. That downtrend could take us down quite a ways when we reach our midday chop. And then usually we get a head fake. And that head fake usually takes us back the opposite direction for a bit before we continue the primary trend from the morning. So that is a trend down day. Normally in this type of mode, let me take a look, because usually when I start talking about deformed days or there's going to be an outlier, usually it's because volatility is really, really high. And right now we're still sitting at lows on the VIX. But I've explained this before on the VIX. The quieter the VIX is, the lower the VIX is, the more dangerous things are. It's like being there's a whole video where I explain how you should look at the VIX. But when we're down here in the low teens on the VIX, when we're cruising at lows, right now to me it's like when that da-da, da-da music comes on in a scary movie where it's too quiet and that movie comes out that kind of lets you know that something's lurking. When we're at lows on the VIX like this, that's what you should be thinking. So that was how I see the trend day down scenario. And of course, because of that retail sales number, it could blow out because we're very close to being on the other side of the open. So this could very well turn into a trend day up if we pop up on that retail sales number and create the gap to the upside. So be prepared for that as well. And the last thing is our range day. With the range day, it could definitely get crazy today because the range in itself will be extreme. So when I say range day, usually we just think of this nice and neat going back and forth, equilibrium, going back and forth across the equilibrium. That's a range day. But today, that range could be extreme. So we could see a nice shot down, a nice shot up, and then a deeper shot down. A nice shot up, deeper shot down. A nice shot up, shot down, and then all of a sudden we get a nice shot upside, and then a little down, and then a deep, a big shot up. And range days on with the activity where we are, it will all look crazy. And there's a million different ways a range day can go. They're basically endless paths a range day could take. But I just want you to be prepared because there was going to be some craziness coming into today, and I should have spoke a little more about that yesterday instead of just that one note about we're not going to hold these levels overnight. So as always, I want to remind you that your most important job as a trader is to protect the capital that you already have. We do this by knowing and understanding the risk in the positions that you have on and the risk in the current market conditions. I hope this helps. We then manage that risk in accordance with our account size. I hope this helps. Wishing you a positive trading day. Let's get out and make it a great one.